Hi, everyone. Thanks very much for joining our panel today. I'm Decloet. I'm the managing editor for Canada for Bloomberg News, and it's my pleasure to welcome these three esteemed panelists today. We've got Alison Fenton-Willock. She's the global head of ESG for the Blackstone Group. Steve Mennill is the chief climate officer at Canada Mortgage and Housing Corporation in Ottawa. And on the West Coast, Patrice Impey is chief financial officer for the City of Vancouver. Welcome to all of you. Alison, we'll start with you. Sorry, Alison, we'll start with you. Blackstone Group has got some pretty aggressive goals when it comes to helping the companies that it owns transition to a more sustainable future, to a lower carbon footprint. Talk to us, I guess, first of all, about the carbon emissions part of that and how you guys execute it.
Yeah. So, starting in 2021, across all of our new investments at Blackstone, we are committing to helping those portfolio companies reduce their emissions by 15% in 3 years. The target is new for the firm, but the work is not. In fact, Blackstone has had a chief sustainability officer on our team for the past decade. And we've always worked with companies across our portfolio to help them reduce their energy consumption and therefore reduce their energy costs and their energy-related carbon emissions. And what we've done in recent times is just taken that program and taken the 10 years of experience and the 10 years of learning that our chief sustainability officer and his team have accumulated, and we formalized it into a program that we can launch at scale across the broader portfolio. One of the things that we have always prided ourselves on at the firm is that we are a responsible investor. We take our commitment to ESG seriously. We take seriously our commitment to being responsible stewards of our investors' capital. And so we do a number of things on that front. The two primary ways in which we do this work is by making sure that we're really rigorous about our diligence before we invest. And then once companies are in the portfolio, we really try to be active owners. I think this emissions reduction initiative, what it demonstrates is, our sort of pivot now to, in addition to those things, which we have to remain focused on because we're investors, we are also saying, you know what, we have a platform, we have a scale, and if we leverage that platform, we can make meaningful impact against some environmental issues like climate change by launching an initiative like this one, where we are actively helping our portfolio companies and holding ourselves to that target of, aggressively reducing emissions across the portfolio.
Patrice, the city launched green bonds in, I believe it was 2018, was the beginning of that program. Can you take us through how that got started and how the framework is evolving as we head into I guess, what will be the fourth year of it next year?
Mm-hmm. Well, the City of Vancouver has been a leader in environmental sustainability for many years. We had our Greenest City Action Plan, which guided us since about 2010. And just recently, our council approved the Climate Emergency Action Plan. That's a very aggressive sort of multi-year plan that looks to reduce greenhouse gases in the City of Vancouver by 50% in the next 10 years and moves us to achieve our goal of being a carbon neutral city before 2050. So, that we've got those frameworks in place and they've really been guiding us. So when we were looking at developing our green bond framework in 2018 and initiating the first green bond, the team, really looked at the market for green bonds, and we were, a really good fit. There was lots of good alignment with what the city was doing on the environmental side. But even then, we really recognized that was only a portion of what the city was all about, and didn't really, our ESG goals and objectives are much broader, and our mission is and mandate for the city is much broader too. I'll just share this mandate, or the mission for our city is to create a city of communities that care about our people, our environment, and our opportunities to live, work, and prosper. So the concept of social sustainability has been a big part of the city, from the origination of the mission. Just maybe some examples on the social side that the city does is we've got an equity framework, and that's put in place to really sort of help with our decision making across all of our plans, make sure that we're advancing the equity agenda as well as advancing our other goals. So in the case of the Climate Emergency Action Plan, that lens was applied, and the actions are also going to really focus on resulting in improved affordability, improved access to transportation, and access to jobs for all residents of the city. So that's one example. Another would be our Healthy City strategy. And that is one that looks at things like access to affordable childcare. And that's a real challenge in the city of Vancouver right now, access to healthy foods, to community programs. So very much a wellness lens. And this year will be the first time that we actually apply that wellness lens to the city's overall budget. So we'll be presenting the budget to council next month, and it will have a wellness lens to it as well. I think the other thing I might highlight is just on the ESG side is our investment portfolio. In 2016, we implemented a responsible investing screening process. So all of our investment partners, complete that screening, and we use those ESG scores, in our investment processes. So we've got about $2 billion investment portfolio. So those are some of the social things that we've been doing on the city side. And so it was really kind of a very logical evolution for us to look towards a sustainability bond and social bond to really capture more of what the city does. And of course, a sustainability bond will allow us to look at green and social, or green or social on its own, or green on its own. So that framework is what the city's been developing right now, and have just put that in place. So really like to align better with our mission. I think the second driver of us looking at the sustainability bond is just our capital plan. A municipality in BC can only issue debt for our capital program or our capital project. So the green bond was very helpful for a portion of our capital plan, but the rest we were still having to issue a traditional bond. So with a sustainability framework, we'll be able to look really across, be able to capture much more of our capital plan when we go to market for our borrowing. And just as an example, a lot of things sort of cross both the social and the green bond structures. For instance, in looking at maybe building a new library, libraries are there really for equity purposes. It's to make sure that all residents have access to digital or traditional information. And so in building a new library, that's really your goal. It's a social goal. But the building itself could be a net zero building, and therefore also achieve the climate objectives. Similarly with affordable housing, which is there for social purposes, but if it's passive house design or net zero, it achieves that goal as well. So the sustainability, transitioning to a sustainability framework, which we've just done, is it really sort of fits well with the mission, but also allows us from a financial side to really finance much more of our capital plan through a sustainability bond.
Steve, as the Chief Climate Officer, part of your job is to make sure CMHC, the National Housing Agency of Canada, is playing a role in a sustainable housing system. But what does that mean exactly?
Well, as you can imagine, housing and climate change are very closely related. Housing accounts for about a fifth of our greenhouse gas emissions, if you include direct heating and cooling costs, as well as all of the carbon that's emitted with respect to transportation associated with that housing. So making different housing choices can have a very dramatic impact on carbon emissions. But there's another side to it, which is that housing is very much affected by climate-related events. Floods and fires are the most obvious ones, and we've seen, as everyone knows, an increase in the frequency of these events, and they're becoming much more severe. So we see a fairly urgent need to start to adapt and adjust our housing system to accommodate these events. Our financial system isn't as aligned as it could be and as it should be to some of these climate-related risks. And a significant part of our mandate is becoming one of trying to ensure system stability by filling some of the gaps that are emerging in the system. And I'm talking about things like both homeowner and rental investors' inability to get complete insurance coverage for things like fires and floods. And when there is an inability of the market to offer these products, the risk of these events tends to then get transferred into the housing finance system. And as under our role as the federal agency charged with ensuring stability of that system, we are looking at a number of reforms that would enable the system to more reliably assess those risks, to analyze those risks, and then ultimately to build them into all the decisions that are made across the system. So we're working on both sides of the equation, adaptation and mitigation of climate change, looking at how all of our tools, programs, commercial products can be aligned and adjusted to both help us mitigate the effects of greenhouse gas emissions, but also to align our housing system and our financial system to a different kind of economy that we will be seeing in the future.
Alison, back to you on the emissions front and the broader ESG front. How do you track and measure the progress that you're making, and what do you think is the next set of goals that Blackstone will take on the environmental front?
Yeah, so our target covers what we intend to achieve at each of our companies in the first 3 years of ownership. We have partnered with Schneider Electric, who's a global specialist in this area, to help us with tracking that data across our portfolio. As you can imagine, a company of Blackstone's scale and with a portfolio of our size, data and tracking and measurement and reporting against our target is something that we were very interested in making sure that we got right. And so we've partnered with Schneider Electric to help our portfolio companies with tracking their emissions data, and in turn, help Blackstone with aggregating that information across our portfolio. So we think the data that we get from Schneider will help us with doing that. The way that we also collect data is we start that collection process really early in the deal underwriting stage. At the time that we're looking at an investment, we have a very good idea of, through the diligence questions that we ask, what level of engagement will be required to achieve our goal. And then we just continue working with that company after they are in the portfolio. So we start even before the investment is made, and then follow that up with tracking and measurement afterwards. And in terms of, next steps for goals, I can highlight 2 other initiatives that we recently launched alongside our emissions reduction program. One was a commitment by the firm that whenever we are making any control investments, that we will try to achieve at least 1/3 diverse representation on our portfolio company boards. And again, this is something that we have a history in doing. If you look at calendar year 2019, the independent seats across our private equity portfolio that we were filled with women, 50% of them. And so we have demonstrated success already in the past, just looking at our placement rate over the past year. What we're committing to is striving for at least 1/3 diverse representation going forward across all of our portfolio companies. And we've also launched alongside that a career pathways initiative, where we're really helping our portfolio companies to rethink the traditional channels of recruiting that they normally use, and really helping them to tap into underserved communities and tap into really high quality pools of talent that might just reside in communities where the candidates themselves aren't aware of opportunities at Blackstone portfolio companies, and the portfolio companies might not have a way of reaching that talent pool. And so we've launched this program that will allow us to work with some really high quality nonprofit partners in reaching candidates and then partnering them with openings across our portfolio. And so I think those examples serve to highlight just how broadly and how comprehensively we think about sustainability. It's not just for us, it's not just environmental sustainability, but also social as well.
And what obstacles do you find you run into as you try to implement these things in target companies or potential investments?
Yeah. So, the obstacles are not about convincing anyone of the merits of it. That people generally get the idea and they understand what it is that we're trying to accomplish and understand the value of it. I think one of the biggest challenges in this space is just data and metrics and knowing what are the right metrics to capture. How do you do that? And putting robust systems in place to make sure that we are getting the actual performance indicators and the pieces of data that will help us to track performance and monitor success against our goals. We are tracking ESG data at the firm in the same way as we track financial information. So just as we go out to our portfolio companies every quarter and we say, report to us on your financial metrics, we're baking in ESG data into those same pipes and plumbing to really send the signal that this is information that is just as important as your revenue numbers, for example. But I think that will continue to be a challenge, especially with regard to figuring out, in the ESG space broadly, what are the frameworks and what are the metrics that industries will coalesce around. And so, that's just something that we continue to keep our eyes on and continue to try to move forward.
I'd like to get the City of Vancouver's perspective on that challenge of measuring. You mentioned the equity goes a lot, far beyond the environment into other goals. How do you guys measure it in the city? And maybe give us a couple of examples.
Yeah. So we do have, with our sustainability framework, we do identify some of the metrics that we'll be tracking. And so that is on our website at vancouver.ca. But maybe, a few of the examples, certainly on the green side, the environmental sustainability, because we've got such a strong program through originally our Greenest City Action Plan and now our Climate Emergency Action Plan. We very much, finance very much partners with the sustainability team to develop really the metrics around that and making sure that we're things that we're able to track. Certainly the obvious one is greenhouse gas emissions reduction. So, measured in the number of tons. And another one would be mode share. So we work very hard as far as shifting, trips within the city from vehicles to walking, cycling, and transit. That's been very successful. I think we've overachieved our goals in the first 10 years. And more than 2/3 of trips are done within Vancouver are walking, cycling, or transit. So the big initiative there, and those are tracked very closely. On the social side, affordable housing, we've got a housing strategy, and we have targets for the number of homes that get built, and a specific target around affordable housing targeted to residents who earn less than $80,000 a year and might not be able to easily, rent or purchase in the market. And so looking at ways that they can have some subsidized rent and supported rent through our affordable housing programs. So we do have quite a few metrics that we align both to the sustainability framework and as well as within each of our departments. So same challenge of making sure that we're embedding for each of our departments and each of our initiatives that combined metrics, with the financial, green, social. And so we do that both through those strategies, like the housing strategy or the climate emergency action plan, and then also through our individual departments' goals and track.
So Steve, Alison, is overseeing her company oversees a huge property portfolio. Obviously, at the City of Vancouver, there's municipal infrastructure and firehouses and transit and so on. But you've got the unique challenge of CMHC's overseeing a housing system that's millions of individual homeowners. So, what are some of the products or ideas that you guys are developing to try to bring, more sustainability to that issue where to that area where you're dealing with so many individual decision makers, if you will?
Mm-hmm. You're right. We do touch on millions of individual decision makers every year, and we currently do offer a wide variety of products and programs that really cover the full spectrum of the housing system. But I will highlight a few areas that we're looking at, which in particular will have an effect on climate. The first one is through our mortgage insurance programs. So as you're probably aware, we offer mortgage insurance for both homeowner loans and for loans to rental investors who mostly provide moderate and low income rental housing to their tenants. We don't currently look at the carbon footprint or really any climate characteristics of those properties when we're undertaking the mortgage insurance for them. And we are looking at ways that we could encourage or provide incentives to make those properties more climate compatible and to use climate information, including energy efficiency, flood risk, other other aspects that have an effect on climate, such as density or proximity to transit, in making those mortgage insurance decisions. Similarly, when we administer our housing programs that are largely focused around constructing new affordable housing, we currently do look at the energy efficiency profile of the building that's being built, but we think there are opportunities to take a much more strong look at some of the other climate attributes, some of the ones I just talked about. And the last area that I should mention is that we are looking into creating a form of green housing bond or a climate compatible housing bond. We currently operate a very large securitization program where we securitize mortgage loans under our mortgage-backed securities and Canada Mortgage Bond Program. We are looking at a bond that would appeal to investors who wish to invest in climate compatible mortgage loans that would help, again, encourage the flow of capital to investors and homeowners who have properties that are more climate compatible. So we're as I said, we're looking at the full suite of programs that we have and trying to find ways to influence and create the kinds of incentives that we think are needed to make our housing more climate compatible.
How might a bond like that work? Give us a bit of insight into some of the factors.
An example might be, as I mentioned, you would probably look at the energy efficiency of the housing of the house itself. So we would want houses that are highly energy efficient, well insulated, and have heating and cooling systems that are low carbon. You would also look at some of the other characteristics of the house. Its density is a very important one because density of housing affects things like our transportation choices. The denser the housing, in general, the lower the car usage and the more opportunities there are for people to walk, to take transit, and so on. So when we look at those things together, we might come up with a climate compatible index or a score of some sort, and then apply that to the mortgages that are being insured and then subsequently securitized under our programs, such that properties that exhibit those characteristics would receive a treatment under these programs that would result in perhaps a lower mortgage rate or other favorable underwriting.
We've got just a couple of minutes left, and I'd like to hear from all of you on one of the criticisms that is made of both governments and companies when it comes to climate goals is that they're too far off in the future. We hear a lot about net zero by 2050 and goals sometimes at the corporate or government level that go even well beyond 2050. What do you make of that criticism that a lot of this stuff is just really being, where the hard work is being pushed off into the future? Alison, we'll maybe start with you.
Yeah, I mean, look, I think, I'll give you the perspective from an investor, we look at the companies that are in our portfolio and look at the length of time that those companies are in our portfolio. And what is within our control is to say, while this company is in my portfolio, what can I do to forward this agenda? What can I do to help this company become more resilient? And so that's what our carbon reduction initiative is all about. That's what our environmental work that we do with our portfolio companies is all about. While I have some influence over this company, what can I do that will help that company become more environmentally resilient and therefore more valuable, which serves a dual purpose of both, generating a good impact for the community, as well as being positive for the funds through which we invest in those companies.
Patrice?
Yeah, I mean, certainly speaking from the government perspective, the governments can actually, change things under their control, but a lot of what they do is influence, and they can do that through changes in regulations, building regulations, building bylaws and codes. But there's definitely areas where they don't have control necessarily over the timing as much, for sure. I think one of the things with the Climate Emergency Action Plan that came up as a sort of a follow-on to the Greenest City Action Plan was really to create that sense of urgency and that it is a crisis, and really to set some very aggressive shorter term goals versus just the goal of being, a carbon neutral city by 2050. In the Greenest City Action Plan, which was started in 2010, we set some very specific goals for the next 10 years, which we're now just coming to the end of. And very clearly, you can see where we've achieved the goals or exceeded the goals, and some areas where we haven't. But I think the idea of having a specific target that people can work toward and having those metrics, it really, really changes the approach and the urgency of making change happen. And we've seen that happen at the city with some very aggressive policies to sort of make those changes. And our building bylaw changes in Vancouver are some of the greenest and really forward looking, so that you can address the impact of housing. I think buildings create about 40% of or half of the greenhouse gas emissions in the city of Vancouver, and then the other half is pretty much vehicles. So it's pretty impactful for some of that work that we can do, and it just shows that the urgency has to be there when you can set a target. But it does make sense to set sort of an earlier kind of 10-year boundary as well.
Steve, we'll give the last word on that to you.
So I would say that on the adaptation side of the equation, there are many things that we can do fairly quickly. I would encourage every homeowner to look at ways to reduce flood risk in their home. There are some basic, simple, cost-effective things that you can do to your house to make it more resistant to flooding. Yes, it takes a longer time to have a significant effect on the mitigation side, partly because we only add about 1.5% to our housing stock every year. So it takes a very long time if you're trying to get there through only addressing new housing, which is why we think there needs to be a greater emphasis on retrofitting existing housing. We need to look at ways to accelerate the retrofit of existing housing, both multi-unit and single-family housing, to make it more energy efficient, to make it to use low carbon sources of heating and cooling. So retrofits are certainly going to be an emphasis of what we're looking at in the future.